Hey, what's up, everybody? Welcome to episode number 101 on season 1. Today we are talking about my Acorns account just rebalanced. And it wasn't even me that did it. It was Acorns that rebalanced my account. So they changed what I guess is they changed some of the percentages on the moderately aggressive account and added some bonds and that kind of stuff. So anyways, let's go ahead and take a look at it. So right now my account is sitting at $1,600. That is a total performance of, over the last year, it is about, or the last, since the lifetime of the account, it's at 8.1%. Yesterday it was sitting at like 9%, but since the rebalance, I guess stuff happened. So anyways, let's go ahead and look at the rebalancing on that. So over here, let me just get to the history. Okay. Here we go. So right here, you're looking at they rebalanced the account. And so they sold VB, these shares down here, they showed sold VB, VWO, and VNQ. VB is the small cap stocks. The VWO is the emerging market, and then the NQ is real estate. And then they bought a ton of VOO, which is the S&P 500, big company stocks. And then a little bit into Treasury Bonds, which is SHI, a little bit into corporate bonds, LQD, and then a little bit into international company stocks. So why did they do this? And how did they, why, and all that kind of stuff. So the percentage they adjusted it to right now is, let me just go to the portfolio. So they did it, they went 38% into large company stocks, 14% into small company stocks, 4% into emerging markets, which was, I think, at like 10%. Real estate dropped another 2%, down to 8% as well. Then they added some more, about 4% into corporate and government bonds. And then I think they added a little bit more into international company bonds. So anyways, what is this? What are my, as far as the percentages go? Basically, they just, the way I see it is they just put 20% into corporate and international, or not, corporate and treasury bonds now, which makes your account quite a bit more safe compared to the 16% that it was at. And it kind of I'm kind of speculative on now changing my account to a moderate account, because the moderate account now is at 40% into stocks or into bonds and 60% into stocks and real estate, which I don't really know if that is profitable or risky enough for the age that I'm at. However, I would still like to see my account at 25% invested into bonds. So how am I going to go about that? I don't know yet. Switch, yeah. So yeah, my thoughts on it. I like it, honestly. I feel like they made the proper adjustment they needed to for that account. I was going to make, like I said, I was going to make a change to the moderate account just because it was 30% into bonds, and so it would have been a lot safer for me, but now it's at 40%, so I'm kind of skeptical on switching, so I might wait another year or 2 years to shift over to that moderate account, just because I'm 28, so I'm closer to the 20% bond instead of the 40% bond. So I'll see how it goes from here on out, but I think that I'll see what exactly happens. I think the moderate account will still be yeah. So with the moderate account, because it's 40% into bonds, I know I've been recommending it pretty hardcore. That's going to be pretty much your basic average account It's not going to be too risky. It's not going to be too safe. It's just going to be completely average. Sorry, I missed your last comment on Twitter. But it's going to be basically just your basic average account, because you want, like, in order to have like a very average account, you want to have 50 in stocks and 50 in bonds. This is going to be 40-60, so it's pretty much going to be the basic that you can get. If you go into the conservative, moderately conservative mix, you're looking at 60% in the bonds, which I feel like right now, if you're young, there's no need for that. However, it's completely up to you if you want to keep your money. Dude just hung up the map picture today. Oh, awesome. That's cool. Boom, 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 boom. What I also believe is that Acorns seen my videos about me recommending different portfolios, and they were like, this guy keeps on recommending the moderate account because there's not enough into bonds in the moderately aggressive account. So they're like, we got to do something to change it before everybody is in a moderate account and nobody is invested into the moderately aggressive or the super aggressive account. So I think they made some changes. That way it's a little bit more safe and people feel like investing started. No, hey, no problem. There's no throwing me off. It's all live, so who the heck cares? But honestly, I think that they are trying to make the changes to help their clients, us, to get better profits and better returns. So I think that it's a smart play for them, especially with the way the market has been. We could be looking at a correction here soon, and the more that you have invested in the bonds, the easier it is to buy the stocks at a sell price. All I say is that I just wish that us, the consumers, would be notified about the switch or the rebalance before it actually happened, before they adjust the percentages. I wish that they would tell us, to give us kind of like a heads up, because it kind of like you wake up one day and it just happens. But anyways, those are my thoughts on the Acorns account rebalancing. If you guys have any comments or criticisms, whether you like it or not, feel free to post it down below. If you guys have any questions regarding Stash, Acorns, or Robinhood, feel free to post them down below. I also cover general investing advice, business, Etsy, and coaching. So post those down below as well. And let's go ahead and dive into the question of the day. And that is, would you rather be able to stop time or fly? And the answer is stop time. I would rather stop time than fly. So that's just my personal belief. I don't believe that flying is very valuable, especially like how fast can you fly? Like there's a lot of variables into flying that actually, but stopping time is like boom, you can just stop it. So anyways, until next time, don't forget to subscribe up here and check out how I continue to keep an 8% return on my Acorns account. And then check out this other video right about here. And until next time, thank you for watching. I really appreciate it.